Welcome back to the channel. If you're new here, I'm Paula. And if you've been around for a while, you already know this about me. I don't really do wild price predictions. Not because I don't like upside, obviously I do, but because I've been in the markets long enough to know that certainty is usually where people lose money, not make it. And today I want to talk about something that's caused a lot of noise this year. The XRP price predictions that went absolutely viral. The ones talking about XRP going to $100, $500, even $1,000. And especially the way those predictions were framed around this year. Because here's the thing. I don't think the XRP conversation is silly. I don't think high long-term valuations are automatically ridiculous. What I do think is that a lot of people got emotionally anchored to timelines that were never realistic, and when price didn't deliver, frustration took over. So in this video, I want to slow the whole thing down. We're going to talk about where these price predictions came from, why this year was never the right way to frame them, and then the important part, what XRP is actually trying to do and why price, liquidity and utility get mixed up so often. And then at the end, I want to bring this back to you, because while people argue about XRP targets, we're still sitting in a very real, very choppy market where strategy matters more than narratives. If you've spent any time on crypto social media this year, you'll know exactly what I'm talking about. Clips everywhere, big numbers in thumbnails, strong language about certainty. Jake Claver is usually the name people bring up first. But he wasn't alone. There were plenty of accounts pushing similar ideas, often talking about XRP in triple or even 4-digit territory. Now, to be fair, and this matters, there's a difference between long-term theory and short-term prediction. A lot of what was said originally sat in the theoretical bucket. If XRP became a dominant global settlement layer, what might that imply? But social media doesn't reward nuance. Clips get shortened, context gets stripped, and suddenly long-term possibility turns into this year guaranteed. That's where the problem starts. Because markets don't care how confident someone sounds. They care about structure, liquidity, and timing. And when price didn't explode the way people expected, the emotional backlash was inevitable. Let's talk honestly about why the timelines never made sense. Not because XRP is weak, not because the idea is fake, but because markets don't reprice systems overnight. For XRP to move into extreme valuations quickly, you'd need something very specific. Not just interest, but sustained, absorbable demand. Markets have to be able to take size without falling apart. And this is where people misunderstood what liquidity really means. High volume doesn't automatically equal deep liquidity. Liquidity is about how much value can move, at what cost, without creating chaos in the order book. That kind of depth is built slowly. It comes from repeated usage, from trust, from infrastructure that proves itself over time. And none of that happens just because a narrative goes viral. Add into that the fact that institutional adoption, real institutional adoption, doesn't happen in a straight line. It happens through pilots, limited exposure, corridor testing, and risk management. So the idea that XRP was going to reprice into the hundreds or thousands within a single year was never about fundamentals. It was about compressed expectations. Now, this is where I want to slow things right down, because this is the part that usually gets skipped. XRP wasn't built as a meme. It wasn't built to replace Bitcoin. From the very beginning, it was designed around payments and settlement. Specifically, the inefficiencies in cross-border money movement. Traditional systems rely on money being parked all over the world in pre-funded accounts. Capital sits idle, waiting to be used just in case it's needed. That's expensive, it's slow, and it's incredibly inefficient. Ripple's idea was simple but ambitious. What if you didn't need all that idle capital? What if you could source liquidity on demand, move value quickly, and settle almost instantly? XRP sits in the middle of that idea, not as a store of value first, but as a bridge. And this is where a lot of people jump straight into price. They hear banks and institutions and assume price has to explode. But institutions don't behave like retail. They don't chase upside, they prioritize reliability, predictability, and cost. This is why the flip the switch narrative was always flawed. Ripple hasn't been trying to replace the global financial system overnight. It's been trying to prove, corridor by corridor, that using XRP as a bridge can actually work in real conditions. And that's important because adoption doesn't happen globally all at once. It grows in pockets. One corridor starts working, then another, then volume builds, then confidence builds. Now, when people talk about XRP needing to be priced higher, there is a real concept underneath that idea, but it's rarely explained properly. If XRP is being used as a bridge asset, what matters isn't hype, it's how efficiently it can move large value without disrupting the market. If an asset is very low priced and liquidity is thin, moving large value causes slippage. Slippage creates cost, and cost defeats the purpose of using a bridge asset at all. So when people say XRP needs a higher price to function, what they're really talking about is liquidity density. A higher unit price combined with deep liquidity can make large value settlements smoother and less disruptive. But this is the key part. Price doesn't lead this process. Liquidity comes first, usage comes first, trust comes first. Price follows function, not the other way round. This is why the timeline mattered so much. XRP isn't a story of instant repricing. It's a story of slow integration into systems that value stability over excitement. And that's where tokenization fits in, not as hype, but as infrastructure. When institutions talk about tokenization, they're not talking about retail speculation. They're talking about representing real-world assets in ways that allow faster settlement and lower counterparty risk. If XRP or the XRPL plays a role in that future, it will be because it's proved itself boring, reliable, and liquid. Not because someone predicted a number on YouTube. That process takes time. And when people emotionally position themselves for a future that might take years, but financially expect it in months, disappointment is inevitable. While all of this is unfolding slowly in the background, we're still here in today's market. And today's market is honestly pretty boring. Sideways, choppy, emotionally draining if you don't have a plan. This is where a lot of people feel stuck. They're waiting for one asset, one catalyst, one prediction to save them. But here's the reality. Markets don't owe us trends. They reward preparation. Choppy markets are where weak strategies fall apart and where good ones keep working quietly. This is exactly why I focus so much on strategy rather than predictions. Range trading, short-term setups, understanding liquidity sweeps instead of chasing breakouts. That's also why I trade on Blowfin. In markets like this, execution matters, fees matter, liquidity matters. And Blowfin supports the way I trade these conditions. And when you use my link, two things happen. You get access to bonuses that help your trading, and it supports the channel, which lets me keep putting out grounded content like this instead of chasing hype for clicks. I don't promote platforms I wouldn't trade on myself, especially when the market isn't easy. And this is where I want to leave you. If you're tired of relying on predictions, waiting for one asset to change your life, feeling lost every time the market goes sideways, that's exactly why we built the Crypto Liftoff course. It's not about calling tops or bottoms. It's about having a repeatable strategy that works in bull markets, bear markets, and boring chop like this. Because markets don't reward excitement, they reward consistency. So if you want to know the exact strategies we use to make money in both the bull market and the bear market, we've made the completely free course for you. The link is in the description below. Alright, let me know in the comments. Do you think the XRP community struggles more with price expectations or time expectations? If you found this useful, give it a like, subscribe. Thank you so much for watching, and I'll see you in the next one.